Ladies and gentlemen, I'm Hiral Tatia. We have with us Mr. Prem Kishan Gupta, CMD at Gateway Distriparks, joining in. Welcome to the show, Mr. Gupta, and a pleasure to speak to you as always. Firstly, how has the first quarter panned out for the company according to you? Has it met your internal expectations?
Uh, Well, you see, the first quarter results are, and the throughput is already announced. It was below our expectations, but there are quite a few reasons. The main reason being that there was a COVID situation in China and there were lockdowns, so the volumes could not be, uh, there was disruption in the supply chain, so a lot of containers got stuck over there, and that had a effect on all the imports as well as the availability of empty containers for exporters. So and that volume has started coming now in the month of July. So we expect that we will recover in Q2 beyond doubt.
Right. And overall, in terms of the kind of margin pressures that the industry as a whole has seen because of container prices, etc., how are you seeing that flow from Europe?
See, the container prices that you're talking about is international shipping. So first, we are not into it, but there has been a correction lately in the freight rates. It has not gone back to the old levels, but still the availability has increased in this month, and the exports which were held up, they will start moving now because the season in the West, the festival season, the Thanksgiving Day, and the sales that they have in the stores during the months of October, November, December. So we see a pickup in that volume. People were short of containers, but now container availability has improved. So and the import arrivals have also started coming in, which helps in our volumes, as well as the availability of empty containers after the import cargo is unloaded, that is available. So and the export cargo is also there to be stuffed in those containers. So we expect a very healthy quarter, and the visibility is quite good, and hopefully it will continue unless some big event takes place, like we are talking about the China and Taiwan situation. So if that happens, the international trade is going to take a hit, and then I think we'll see some effects due to that. You are on mute. Hilal, you are.
And sorry, and overall, what's the kind of impact are we expecting on the back of Russia-Ukraine crisis?
Sorry, can you please repeat the question?
I'm saying, what's the kind of impact we are expecting on the back of the Russia-Ukraine crisis as well? Do you see any impact, or do you think it will be a non-event?
See, between Russia and India, there was hardly any containerized business. It is more of bulk, whether it is fertilizers, whether it is oil, whether it is, commodities. So that did not impact our business due to the war situation over there. As I said, the impact was more it's seen more in China, where the COVID
Correct.
lockdowns were there. So the Russia-Ukraine war did not have any impact, but China-Taiwan tension, if it escalates into a war, I think that one should keep in mind.
Right. And overall, if you see in terms of where volume growth goes, we've seen good, healthy volume growth as well that continues. So if you have to divide it between the ICD business as well as the CFS business, which one is going to be the growth driver from here on?
The rail has been our strength and the growth driver in all these years. And going forward, we will see much more, volumes coming to rail. CFS business, we have exited Punjab Conware, as you know, and we're not looking at any other CFS. We have, in the last 2 years, we have given up one CFS in Chennai, one CFS in
Correct.
Nhava Sheva. So our focus and strategy is to increase the volumes in the rail, which are increasing because the DFC is, giving us big value, to the customers in the sense that the transit times are less, and we give them short transit time, within a limit. Like for instance, our export trains are going from our ICD in Gadi Harsru, which is a double stack operation, to Mundra and Pipavav
Mm,
ports. So our export trains are within 24 hours,
mm,
whereas the export is within 24 hours transit time, and imports are about 36 hours. So the average is
correct.
30 hours,
Mm,
which we see we going forward. I mean, when the DFC sections are completed in full, it will be less than 24 hours.
right. So
And
so with this, post the restructuring also, what
yeah,
is the growth potential we are seeing?
we are seeing very good potential, and that
Mm,
is why we are expanding also. We'll be coming up with two terminals very soon, within this financial year.
mm,
We have capacity at our existing terminal, so we keep on increasing we have the entire ecosystem, the infrastructure and everything, the land bank. So with a very minimum capex, we can increase
mm,
our capacity. So right now, our capacity is say 300,000 TEUs at our existing terminals. But I mean, it can be very easily expanded, and we can, in the long run, we can go up to 1.2 million at these four
wow.
terminals.
Mm, mm.
Yeah.
And what's the capex we are planning for this expansion, and how are we going to fund the capex?
Capex will be between 200 to 250
Mm,
crores, and 50% will be from our own cash flows, and
okay.
50% will be through new term loans. While we take the new term loans, the existing debt is being paid on a monthly, quarterly, on a 6 monthly basis. So our net debt will remain low only because fresh borrowings will be there, but the old borrowings will be paid off.
Right. And overall, are there any plans in terms of expansion to enter in the bulk commodities market as well?
No, we are not going to be in the bulk commodities market. Anything which is containerized, we'll move it.
Hmm. The reason I asked this question to you as well, because recently I was reading specially about Container Corp as well, that
Mhm.
they are planning to expand, and the intention is to increase their revenue contribution from a 10% to a 25% in this segment. So is there value in this business that someone is expanding, and do we also see value? That was my major reason for asking this.
We have done domestic movement, right? It's not that
Correct.
we haven't tested the waters
Hmm.
there. What we have seen is that the movement is very slow, and the turnaround times are very high.
Correct.
And the revenue is, because we calculate per rake,
Hmm.
per month revenue, which is less than 40% of what we do in Exim. So right now we have enough capacity to handle our Exim volumes, and we are focusing on that. Domestic, we have tried, we did it quite a bit, and then we exited.
Right.
So we don't see healthy
Hmm.
margins, on the investment over there, or on the cost that we incur, by deploying rakes and people over there. So we completely exited the domestic business many years back. And
Right.
even when we are asked to revisit, I mean, we have
Hmm.
done it because we know,
If there is experience that you
yeah,
have. Yeah.
and we keep on testing. Even today, I mean, the domestic movement does not give enough revenue
Mm,
or enough
mm.
margins to consider that.
Right. So, Mr. Gupta, would it be right to say that the ICD business will see double-digit growth going ahead, and we will see stabilization happening in the CFS business?
Yeah, you are absolutely correct. You will see high growth in the rail
Mm,
business. on three things. One is the volumes on the container volumes are increasing. Second thing is that we are getting market share.
Hmm.
And third thing is by building these new terminals, we'll add. Every terminal that we add over a period of 1 year or say 18 months, our throughput will go up, and it will be in the high two digits.
Correct. And overall growth, how much are we targeting in FY23 on the top line, bottom line, and on the margin front? Is there any number that we could look at? Not absolute, but in terms of growth.
See, in terms of growth, I can only say that on the volume side, our throughput will increase. That will increase the revenue,
Hmm.
and since our overheads are fixed, it will increase our margins at the EBITDA level by a couple of percent.
Okay.
And the revenue and throughput can be we are projecting at in double digit.
Hmm.
Again, anywhere between 12 to 15%.
Correct. Right. So I think that looks like a good growth story and a good roadmap from here on as well. But thank you, Mr. Gupta, so much for joining
Thank
us on
you.
the show.
Thank
It's
you.
always a pleasure to speak to veterans like you of the industry that you belong to get a lot of insights. So thank you. Stay safe. Congratulations and good luck for the coming quarters as well. I know that you've said that the numbers have not met your internal expectations, but overall, good luck for the coming quarters.
Thank you, Elal.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.